Hi everyone and welcome back to my final morning report charts appraisal on Thursday the 17th of September with me, Rich Perry, market analyst at Tech Markets. And we'll look at gold now, and gold has made a move on a breakout actually, interestingly, in front of the Fed. And what does that tell you? Well, gold strengthening generally is indicative of a weakening dollar. Dollar has been under pressure in the last sort of day or so, and that would suggest that or the market is not looking for a rate hike, interestingly enough. But I still think this move is going to be counter trend. I think it's going to be sold into ultimately. Um, it's gone a bit early. I don't deny that, but I think that it's interesting that we've seen this in front of the Fed. Um, you could well see further gains to the upside if the Fed doesn't move. You've got the resistance overhead, 1220, sorry, 1,125.50 towards 1,131.85, which is 113.185, is that massive old floor of support that came back from November last year. And that is still actually pivotal as a resistance, interestingly enough. On the hourly chart, that's certainly had a part to play. But this sort of move has done very little, actually. I mean, yes, you've broken the downtrend, but you're still trading around all the falling moving averages. Momentum indicators slightly improved on the stochastics, you would argue. Actually, that's a buy signal on the stochastics if you're going to take it at that. But I think ultimately you look at the RSI, it's basically neutral, MACD line's neutral. So I think this sort of move is going to be counter trend and ultimately sold into the bigger trend, which is that big downside move. Ultimately, I'd be looking out for just look maybe sort of waiting for the reaction, waiting for the move to play out, because you don't really want to be trading counter trend. Ideally, you don't want to be buying gold into a counter trend move, but I'd be waiting for that move to just play out, just to settle down, and then ultimately I think gold will be going lower in due course, because I expect further weakness, but you could see some near-term volatility, and that will potentially play out today. Now, if the rate doesn't, if the Fed hikes, then I think 10.89 is likely to be tested, and probably back towards 10.80 um, as the dollar strengthens. So I wish you good luck in your trading today, and I will speak to you later. Thank you.